Welcome to Drill Down Earnings. We have first quarter 2025 results from Smartsheet. It's a good quarter for this company. Market likes it. I like it. I'm Cory Johnson, Chief Market Strategist for the Futurum Group here in Austin, Texas. Yep, that's Austin. Hot out there. Also hot. Smartsheet results. Wall Street just likes a beat or a miss, and this was a beat. But here are the actual numbers. So first quarter fiscal 2025 results. 20% growth on a year-over-year basis, $268 million in the quarter, and they've socked away contracts, annual recurring revenues now of $1.056 billion. Does the market like those things? In operating cash flow of $50 million and $46 million in free cash flow? Sure. What the market really liked was a buyback. They announced a $150 million share repurchase program, and that gave the stock a boost. But let's go on a little bit deeper into the numbers. So first of all, the revenue growth rate, as I mentioned, at 20%. That's slowing. It's only slowing a little bit. It's 21% last quarter. But you can see over time as the business gets bigger, it grows a little more slowly, but still 20% growth, nothing to sneeze at. And they are creeping towards profitability. Creeping. They're not there yet. They still have an operating loss of 4%. Forget their actual gross, their gross margins are positive, 4% loss on an operating level. Once you throw in taxes and other things, this is not a profitable business, but they're generating cash flow and free cash flow, and they're going to use some of that to buy back stock, as well as all the money they've got in their balance sheet. So the market certainly like that, and that growth again in annual recurring revenues, getting them up to $1.056 billion. That's 19% growth, almost as fast as revenues. So again, they're socking away contracts that are getting paid over a long period of time and growing that business at about 19%. So when the numbers came out, as I mentioned, when they announced that stock buyback, well, the market loved that. Stock surged initially about 11% or so in after-hours trading. And that's good for a stock that's down 23% in the last year. Not a good year for Smartsheet. Now, when asked in the conference call about this particular software about sort of work planning, in a different industry, it might be called Enterprise Resource Planner, ERP. But this really is about making plans to do work that doesn't necessarily have to do with manufacturing. Kind of a new category. And what these guys have found is their customers are starting to figure out what they do and why they need it. And when customers go to them, Mark Mader, the CEO, was asked on the conference call, do your customers really know how to ask for what you do now? And is plan management a notion that they really understand? Here's what he had to say.
This notion of how to do plan management across a highly diversified set of business units, being able to apply corporate governance and policy. These are things that 5 years ago never even came up in conversation, and they're almost present every single time now. So again, how much are we getting more yield today from our enterprise strength and feature set? I would say yes. The median customer, I would say, is developing. The highest of the high-end customers. Everyone's asking these questions now. There's not a single customer that I've seen who is just willy-nilly approaching it on a feature set dimension. So that plays to our strengths. I would say the conformity and customers choosing to consolidate is still more grounded in future investment and where's the next allocation of capital going, as opposed to we need to eliminate all other tools from our environment.
So getting the right tools in the right hands, hey, that's everything for everyone. Why not include Smartsheet in those possibilities? All right, I've got one number that will summarize these results. The thing I want you to take away with, remember about Smartsheet's fiscal first quarter 2025 results. That one number that means a whole lot, the drill down bite, right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Smartsheet first quarter 2025 earnings are out. The stock is up. Here's your essential summary. The drill down earnings takeaways. So again, revenues up 20%, $263 million. Annual recurring revenue also increasing for this company. But I think, again, the most important number here is that revenue growth is slowing, but it's still growing. So the number I want you to take away, 20%. This business is growing at 20% on a year-over-year basis. It's the slowest it's ever grown, but the declines in the growth rate seem to have subsided, allowing them to feel the comfort of coming out and doing a share repurchase here. All right, that's your bite, and that's your look at Smartsheet earnings. I'm Cory Johnson. Check me out at X at Cory TV. Check out the Futurum Group's YouTube page. Drill Down Earnings, part of 6.5 Media.